The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is October the 15th, and it's my pleasure to be here in the third hour, following two fabulous hours. First hour by Steve Rhodes is giving a candlestick presentation, all-day presentation, a webinar that's coming Friday. Check it out on the front page of TFNN. And Tom O'Brien and Steve together, fabulous. A lot of information, a lot of good information, as always. I come in and I do my very best here, doing the ChapmanWave. What is it? It's a methodology that identifies the lowest, most identifiable low bar, and from there you should be able to count at least 4 peaks to the upside. And if they occur, then at the fourth peak, peak D, I letter them A, B, C, D on the way up, alphabetically, in sequence, and at D you can expect, doesn't have to happen, but that's where you can anticipate that there might be a pullback of substantial time or price. However, what we're looking at right now is I'm showing a chart of the E-minis, the E-mini S&P 500 December contract, and it's right there. If you're looking at it on Tiger TV, I always say Tiger TV, and then look around and say, oops, I forgot to set up my, there we are, I'll do it right now. If you're looking at Tiger TV, you will see that I've got different ChapmanWave notations. There was a peak D that was made right there on the E-mini on October the 1st at 1451.50, pulls back, starts a brand new buy mode on the 2nd at 2:30 in the afternoon at 1432.50, and it goes peak A, B, C, D, and it can go to an E and an F. If it goes to an F with the technicals not confirming, in this case the stochastic was much lower, on balance volume was much lower, and there was this little right shoulder bump in the MACD, you can see on the chart right there that I'm circling. At 1466 it gave a very nice reversal signal, and it's gone down in a left side, right side price time match, which went to the low of the 10th of October, but on the 11th, on the 10th at 1421.25 at 6:30. Is that p.m.? Yep, 6:30 p.m. Started a reversal that bounced to that white area right there over the gray consolidation area and the pink high-level resistance area. It went to 1439.25 and it pulled back, went to trough E. Now it's made a peak E, and it seems to be struggling to hold that 9-period exponential moving average, the maroon moving average right there at 1424.75. Right now it's at 1425.75, 1425.50, up 4, and just a so-so bounce. But I'm pretty sure that we're looking at a fairly narrow trading range today and going into tomorrow. However, that debate, if I get a chance, I'll talk about it just in market terms and in expectation terms. But absolutely, there's no question that Mitt Romney cannot expect the same kind of impact that he had the first time. All he has to do is he has to maintain that integrity that he showed, and Obama has to come back with all his knowledge and everything in the format that he loves best, like Clinton, like this kind of open forum, and you can kind of go anywhere. And also I'll talk about what's in a Candy Crowley in a moment, if I remember. In the meantime, let's go straight to the nitty-gritties of the market. The Dow's up 28 at 13. Let me now do this. Get rid of the E-mini. I don't need it anymore. Go like that. Oops, like that. Take it away. Let's go straight. I'll do them in sequence. The Dow is INDU. The Dow is at plus 28, 13,357. I've given a green support zone in my chart that you're looking at right now. I'm using the white for the moment. I should have switched, but I forgot. That white area says that, I'm sorry, the green area says that that's not only a support, but I'm going to change that color to a gray. If, in fact, the Dow in the next 3 days, by Wednesday afternoon, if the Dow is underneath 13,250, it has to be changed to gray because it's starting to get into very strong resistance. If, in fact, there's been a very nice bounce, and it bounces to somewhere around 13,470 to 13,520, that has to be considered a really good support area. And not only that, you've got the up channel, that red line is just testing it right now. So the Dow needs to treat that as what I call a propellant zone rather than a repellent zone by sliding under it. So that's the Dow. The S&P, SPX, we'll just go right through them. Then we're going to take calls. We've got someone online right now. I'm going to get through these as quickly as I can. There was a peak. The peak at 1474.51 on the, was that the 14th? Yeah, the 14th of September. Was not surpassed in that rebound. Is making the pattern that I call the dreaded H. And that dreaded H says, be very careful. Why? Because when the price pulls back and it starts to go underneath the left side low bar, in this case 1430.53, the low of the 26th of September, that's the pattern that I call the dreaded H. Looks like a lowercase h. And if it closes decisively underneath that, you've got to start looking at major support levels coming up, because it says that's a failure pattern. But I'm more concerned. Remember I was speaking about the ChapmanWave most identifiable low bar? Well, look at the low bar of 1266.74. 1266.74 right there on the week of June the 8th, and it goes peak A, B, C, and it goes to D at that 1474.51 level. And now what's happening is that the price last week closed underneath the 9-period exponential moving average. I'm going to watch this really closely, because it says right now the upside should be limited and the downside should start making lower lows and lower highs, just like the Dow. And my anticipation is that the high of 1422.38, the high of the week of April the 6th, that will be the real test to see if it holds, if it goes there, if it goes under it, and then it goes into this gray zone, which is around about 1400. And I've got a leg F/B in the monthly chart. So we've got our parameters very clear right now. Let's go to the QQQ. The QQQ, not four, but three of them, has made a left side, right side arch formation. It's broken the first support level, and now it's coming into a very critical level, and that level says that the 66.28 low of the 7th of August is really important to hold. Left side price time match says that on the 19th of October, that would be where one can anticipate, I think I missed it, sorry, should be right there, right there. Let me just do that again. Yep, I made a mistake. Right there. That says that by the 17th. So what is that? Is that the day after? Yeah, 15, 16. Yeah, perfect. On the 17th, which is the day after the debate, the morning after, by 10 o'clock in the morning, 10:15, we're going to see if that 60, what did I say, it was 66.28 level is either holding, becomes a resistance level, or there's been a fabulous takeoff with a big bounce, and that bounce should be, let's see if Apple's participating. AAP. Well, let me go to Apple, and I'm going to do these in sequence. So Apple, a little too quick here. Apple, same thing, but Apple's had a higher right side low bar. It hasn't taken out the low of Trough C at 623.55 on the 9th of October. So the stochastic's flattening, and the MACD is still very negative. Yeah, I think Apple's got very limited upside. It has to, from my eye, it has to test between 620 and 600. And the time price match would take it to the 24th of October, and that would see the gap, and that would be around about the 600 area. That's the major support for Apple. But I'm going to do Google right now because it's very important. Google, to my eye, and if I go to the 120-minute chart, there is a target for Google on the left, and that target is between 710 and 706. That's the low of the 18th of September. And everything about this chart says that there should be some kind of a test going into the week of the 17th. That's this week. Into this week. Can that be 17th? Yeah, the 17th of October for a test, as I say, between that it's really about 715 to 700 area. So that's very important. Now let's go on to the gold GCZ. I've been talking about gold looking very weak. I don't like the action of gold. I think it's going much lower. As far as I'm concerned, making lower lows and lower highs, 1735.40 down 24 right now. I'm a little behind. No, I'm right on spot. And that says that in the daily chart, we're just going underneath the support level that I drew in the gray zone. And what's very important about the weekly is that it did make a PT in a lousy rally that didn't take out 1800.98. I think it just took it out. No, it didn't even take out 1798.10. It could not take out the high of the week of the 2nd of March. I suspect that gold has to test. It's at 1735. I think it's going to test 1713 to the 1698 area, and we'll see what happens there. But in the meantime, I think it's a consolidation after a really very good move to the upside, but not as good as it should have been based on the weekly chart, left side, right side pattern. Silver's also down. Silver is down 87 cents at 32.79. Platinum's down 23. And now this is very important. High-grade copper, HGZ12, is not doing well. It's pulling back, but it is still in the weekly chart, it's still in a high-level consolidation. It hasn't broken down, but it really is not showing this kind of strength that I would like to see. Crude oil, CLZ12, I'm not sure if that's the contract that people trade. Doesn't matter. I'm looking at it, making a potential dreaded H. If it takes out, it's at 90.74. If it takes out the low of the 9th of October, 89.69, I would think it's going to do a retest. And the weekly chart says, whoa, be very careful. Because if it gets into the wicks of the last 2 weeks, anywhere between 89.50 and 89.20, probably it's going to retest the low of 88.09. So I think we've done everything except the most important right now. Two most important things is the TLT, which is down a fraction. Isn't that interesting? It's down a fraction. It's done quite well, but not great. Now I'm going to go to the weekly chart because that weekly chart has decisive. I mean, the parameters are really clear. There is an up channel that's been in place. And if the TLT at any point in the next 2 weeks takes out 118.05, that was the low of the week of the 14th of September. I'd even go so far as to say as if it closes underneath 119.20, below the up channel support, that's going to be a negative. That's going to say that the monthly chart, I have to consider that maybe that is a peak D in the monthly. I don't want to go through the whole process again, but I'm watching it very closely because it's acted very well considering that the market didn't really plunge that much, and but not good enough. In fact, the TLT should have been testing the highs of the week of the August the 31st at 127.72. I'm going to John in Venora, Tennessee. Oh, hi, John. We're just about to go to a break. What did you want to look at?
Donuts, DNKN.
Great. I also want to look at that, so we'll be back with John straight after this looking at Dunkin' Donuts, DNKN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And we are on with John from Tennessee, right?
Yes, sir.
Good. So you want to look at Duncan. Do you have a position in Duncan at this particular point?
I do. I've been in it for quite a while, and I was down on it, and now it came back to where I'm even, and I wanted to know what to do, like, from this point forward.
Okay. Well, I'm pleased you gave me that little preamble about it, because there are a couple of things that I need to talk about. I'm going to go backwards. Number one is when you're in a position and it goes against you, and it must have gone against you by about 4 or 5 points, right?
Yes, sir. Yes.
What I always recommend is to, as soon as it gets back to even, to reassess what you want to do, because you do not want to go through that kind of pain again. That's number one. So speaking to that issue, and that's what we're all about here at TFN, is trying to educate with the experience that we have in certain areas and certain situations. I'm not going to tell you to get out of it and get back in it if right now, because that's kind of what I like to do. I'm not afraid. I don't think about tax consequences or anything. I look at it and I say, wow, I don't want to do that again. I thought it would go up, it went down, or I thought it would go down, it went up. And now I'm at even. I've got to clear my head. I just got to get everything straightened out. I'm going to get out. I'm going to give myself either an hour or two or a day or whatever it is. And if I want to get back, even if it's a little bit higher, I'll get back in. But there's an easier way to do that. And I'll explain what I'm looking at. And I just discussed this moment about the ChapmanWave. It's a very specific methodology that is very easy at some point, and then it becomes a little more difficult, and then it becomes a little more difficult as you move on through the different sequences, which is why I love to look at time frames, because when it gets difficult in the daily chart, because you don't quite know what the wave count is, but it's still doing well, you can look at the weekly, and the weekly will say, hey, stay in this position because it's only leg B up or whatever it is, or get out because you're in a D. So this is what I'm saying to you. From the low of 27.63 that was made on the, and yes, folks, I've gone to the black charts for now. I do find that I'm just visually, I'm able to see them a little bit better. So that right now, that's what I'm sticking with. I'll switch around. 27.93 was the low on the 23rd of August. And the low on the next day was 27.96. What I tend to do is I use the same methodology on the upside when I look at two price points that are a D or E or an F, and you get a fractionally lower next bar, which makes the peak. I say, uh-oh, be careful, because that could be a sign of a turnaround. Well, that was a turnaround. It went to peak A at 29.58, peak B at 29.72, peak C at 30.80 on the 12th of September, and then a peak D confirmed the next day with a lower high bar on the 14th of September at 31.24. It only pulls back modestly, and then it goes to 28.50 on the 26th and starts a brand new peak A at 29.88, peak B at 30.25, peak C at 31.22, and now it's in leg D. So the irony of this whole thing is I'm saying, uh-oh, when it gets to leg D, you've got to be a little careful. You've just gotten back to even. Now I'm going to say to you, John, what I would recommend, I love the chart, and the fact that you initially started off saying you were getting into this, and this kind of was a longer-term position that you wanted, right?
Correct.
I tend to think that you are correct. Because it's rallying now in this very weak market, I like it very much. And I would suggest two things to you. One is that on some part of your position, you put in a stop at 30.25. I know it's 2 points lower, which puts you a little bit back into the position that you were in. Mm-hmm. But that says to me that you're going to give it a little bit of room, because this is still a very nice leg B up in the weekly, and it's made one single leg to the upside from the 23.34 low, 23.24 low of December of 2011, all the way up to the high of 37.02 in June of this year. That made peak A. Now it's come back, and the monthly chart is holding the 200-period moving average. In the weekly chart, it's way above the 200-period moving average. I'm going to give it the benefit of the doubt, even though on the very short term, I've got leg E up in the 120-minute chart with a lot of volume, which says, you know what, it could pull back, and it could pull back towards the where it closed on Friday, which was right about 31.60, 31.52 is the 200-period moving average, and 30.25 is the moving average of consequence in the 120-minute chart. So I like it. I think you're in a good position, and I'm going to say to you, keep your position. But if it goes under 30.50, take some of it off. You don't want to go through that same scenario again. And I'm going to ask you, call me Wednesday if you can. Let's look at it together, because it might have had a little bit of a consolidation and it's ready to go again. Thanks for calling.
Okay, thank you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you've heard Tom O'Brien on the air and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. I've now got it on a white chart because I wanted to do a little bit more work on it. You know, I was looking at the Duncan chart, and the way I'm analyzing it right now, the work that it's done, this cup formation at the bottom, says to me that there are many reasons why Duncan might just survive quite well over the next 3 to 6 or 8 weeks, because it's in an area where I suspect this is not Starbucks. I mean, this is Dunkin' Donuts, and it's just a huge difference in prices of their goods, of their coffees and donuts and sandwiches that they make. So what I'd be looking at here is that if Dunkin' Donuts just has a mild pullback based on the 120-minute chart, I'll just show an area that I'm thinking will be the support. Yeah, somewhere between, it's at 32.60 right now, somewhere between 31.75 and 31.20. If it just is a mild pullback, it doesn't even get there. Instead, in fact, if it doesn't get there, but before it doesn't go down there, but instead it breaks above the 33.09 high of today in the next 3 sessions, I would put the left side, right side price time match to say that the next level of importance on the upside is 34.67 and 36.11. Now, some of you who know my work, who know how I usually talk in the different, when I get calls and questions, I try to assess by the voice, by the question, what really is going on. And sometimes I'll say, this is a short-term trade, right? Or you want to go long, you want to go short, or it's a more intermediate term. That's the reason why I wanted to give a boundary for John, because if, in fact, the pullback is just mild and it goes higher, he stays in the trade. But this is the time to assess, to say, hey, I'm back there. Now I'm not going to give anything back like that going to 28. I don't mind 2 points at this stage, which is just reasonable. It's less than 10%. It's like 8% from here. I don't mind that, but at least some part of the position has to be covered with some kind of a stop on the downside. But the weekly chart is actually looking as if there's all these patterns that I'm talking about. I have a master trader series for level 2. Those of you who have done my level 1, you know my work, you understand what it's all about. If you are using it all the time as part of the vernacular that you're in, whatever techniques you use, but you also use the ChapmanWave, then you might be interested in my level 2, which is coming up Thursday a week at Babson Executive Conference Center in Wellesley, Mass. We always have it. I have some folks that have been coming for 4, 5, 6 years even to the higher level, because they just love to have a review, plus all the different techniques that I've modified over the years, especially the last 3 to 6 months. I've done a great deal of work in honing, just whittling away to refine some of the techniques, plus adding a couple of others. So it's going to be a great review, plus all the new aspects. One day, live with me right there at Babson with a great lunch that they have. And but I'm also doing, because I've been asked about this, I've set it up now for December, Thursday and Friday. December the 6th and 7th, I am going to do a webinar, a live webinar. For this, you get the CD introducing the ChapmanWave methodology. You get a free webinar that I want you to review beforehand on moving averages, how I use them, etc. And I will go through this. I'll be making absolutely sure that there are techniques. You know how it is, sometimes you do these things, and as you finish, you say, wow, that was great. And then an hour later, you say, where should I start? What am I going to do? Well, I'm going to show you exactly where to start. I'm exactly to follow through on techniques that you might have mentioned to me that you use. I will try to add them to the ChapmanWave as we're doing the course. So it's 2 days. It should be just a great deal of fun. Let's go to our next caller. We've got Lou in Nashua. Hi, Lou. How are you?
Fine, thank you.
Very good.
Yeah. Looking for an entrance on SLV.
All right. SLV is the iShares Silver Trust. You know, until SLV tests, it's at 31.76. SLV is the symbol. It's at 31.76, down 69 cents. I've got it at a peak F in the ChapmanWave with the technicals very, very weak. Let me just quickly get to the weekly. Whoa, what happened to my weekly chart? Oh, that was the weekly chart and just moved down. Yep, there it is. The weekly chart went to a B and then a C. So that's a good sign. And the stochastics at 87%. The MACD is turning down. Relative strength, that's for those of you looking at my chart, that's that gray line there, is turning down quite sharply. But I will not want to do anything on the long side. First of all, the monthly chart is making lower highs and lower lows. So until that changes, until the SLV decisively takes out 36.44, the high of February of 2012, I have to consider that the pattern is going to remain until it changes. So I've been looking, I spent a lot of time this weekend looking at, I didn't even look at the gold or silver stock charts. I wanted to spend time on the gold and silver contract in December. I wanted to spend time on the SLV and the GLD. And everything about what I'm looking at says that the candle of, that huge candle, that breakout candles, the upside on the 31st of August with a low of 29.32 and a high of 30.80, that's the candle that's going to be very important. And look what it does. If you're looking at my charts, it also coincides that right in the middle there is 30.36, which is the 200-period exponential moving average. Now, I could be wrong about this because, you know, metals are funny things because they are influenced by overseas events. There's just a whole bunch of stuff that goes on that is very important. But the way I'm measuring it right now, let me just finish doing this. I'm going to do that to there. Give me 1 second. I'm just drawing a left side, right side potential price match. And that says green. And now I'm changing it to red. And I'll tell you exactly what I'd be looking at. And I'll tell you why. Yeah, there it goes. All right, 1 second. I'm doing this. Now, I don't know if you can see these charts at all. If you're looking at Tiger TV, if you go tfnn.mobi, you'll get them. But there's a very important downside, a diagonal, I call it the ChapmanWave inside wedge. If the 30.75 level is taken out in the next 3 days, then there's just a really good chance that it's going to decline, bouncing, trying to hold the support line, declining support line, and that's where the low of that candle, which is at 29.32, to the point that I've chosen right now of 29.28, that's what I'm looking at. Now, if you're looking at it as would you be looking at it as a trade, or how would you want to trade this or play this? As a trade?
Mm-hmm.
Okay. So in other words, like a swing trade. In other words, if you're going to buy a signal, you expect it to rally back to the 34.08 level that it made on the 1st of October. Something like that?
Yes.
Okay. So the only way that I can see it even having a chance of doing that, if by Wednesday morning at 10:15, if it has gone above the candle with a low of 32.48, that's the candle of Friday, and if it closes above 32.76, that is the red, this is the maroon color 9-period exponential moving average. I just don't think it's going to do that. It might bounce, but I don't think it's going to do that. So my recommendation, if you want my recommendation, I'm saying hold off, have a little bit of patience, and even after this big move up, the weekly chart is still good, and the stochastic's in the 83% level as it's coming down about another point, a point and a half. Then I'm going to say to you, okay, that's a chance that you can have a rally to a leg D in the, in a leg D in the weekly chart. Otherwise, it's going to be a failure pattern. The stochastic on Friday afternoon at 4 o'clock of the SLV is at 79% or lower. I see the monthly chart pulling back even more. So my bias is to the downside. I'll be wrong if it has a high-level consolidation by making the low of today 31.49. If it doesn't break that tomorrow, and it goes sideways and it goes into the 32.27 area, I'm going to say, oh, well, that's not bad. That's kind of good. But I don't think it has the strength right now to follow through to the upside. It looks to me like it needs time and price. It's not a big deal. It's had a fantastic move. So my recommendation is hold off. Wait for it to get to between 30.36 and 29.25, and that's where there might be a very nice signal that says very strong bounce coming, and we can go from there. Probably by Wednesday I can have a look at it again for you if you want.
Okay, that sounds good. Thank you.
Thank you very much, Lou. Thank you for calling. I appreciate that. So, folks, what I'm looking at in the GLD, the GLD is making lower lows, lower highs. There's an area with a gap. This gap is important because 3 times I tried to fill it and failed. So it's between 167.23 down to a low of, no, it even went down to 166.30. No, all the way down to 165.78, the high of the 6th of September. That's the area that I would paint if I was painting right now, and I'm going to do that. Paint it in gray. And why am I doing it? Actually, I'm going to do the whole candle. No, I'm not going to do that. I'm going to do this right here. That whole area, to me, that's a very, very nice sign of support. And that sign says if the GLD goes to 164 to 163.50, that's the area that I'll be looking to see. Is there a very strong reversal to the upside coming? Or is gold, and this is my suspicion, I think gold is going to take a bit of a breather. It's had a spectacular move over the last couple of years, had a spectacular rebound in the GLD all the way from 148.27 to the recent high of 174. That's 30 points. I just don't see any reason why it shouldn't. You can't expect some kind of a pullback. But that weekly chart, having made it peak D with the doji, is what I'm watching real closely. Hey, folks, look at this. Left side, right side price time match. the GLD went to round number one. I'm going to teach all these techniques, round numbers, left side, right side, price time match, how you can measure it, what you're looking for, what do the candles mean. Look at that doji candle on the 5th of October, the week of the 5th of October, 174.07. 7 cents above the previous major high of the lip of this cup. And then it made 2 dojis hinting that it was running out of steam. So it pulls back and it's on the 9-period exponential moving average. If on Friday afternoon at 4 o'clock, the GLD is underneath 167.20, let's say. Right now it's at 168.19. If it's underneath that, then we're looking at, right there, we're looking at 160, no, not so far. 166.30 to 163.66 will be the area of, absolutely key area for the GLD. And yet the weekly is still holding very well. I was just surprised that the last move up in the technicals couldn't take the GLD all the way above the 174 to like the 176 area. That's what I would have expected. That resistance, if I had to draw it in here, look at it. This candle right here. Look at that resistance. That is really strong resistance. And it's tried to get this so often. So in a way it's a magnet. We have to still consider it a magnet. At the same time, it's a repellent zone based on the daily chart, which is pretty weak. So I'm going to watch this really closely. So I just don't want to position in the GLD or the SLV at this particular time. I'll be looking out a little later on. We could do the Euro, EUR, USD, do it in the white background right now, because that's what's there. And that's saying, yep, just draw trend lines. Easy. Look, you go down like that. I actually hate this kind of pattern. I shouldn't say hate. It's a very strong word for a silly little chart pattern. I dislike intensely because it's a wedge formation, an asymmetrical wedge. And what it should say is that if you break above it, you're going to go much higher. Actually, all that happens very often is it just goes to the next peak on the left, which will be 1.307. It's at 1.295. And then it comes back down. And if it breaks out, breaks down. For me, that's a little different because the pattern that I'm looking for is far more potent. It's one that says there is the potential for the dreaded H to become an M formation. And that says if the euro-dollar currency pair takes out 1.280 in the next 3 to 5 sessions, then you've got to look for quite a bit lower prices, and it's that huge candle that we'd be looking at on the 7th of September. 1.262 would be the low that I'd be looking for. So where would it break out? It really has to break out decisively and take out 1.307, the high of the 5th of October. So that's what I wanted to look at. And then there's something else that I haven't discussed at all, and it's called, I'm going to go to the black chart, it's called $VIX.X. And that VIX is at $15.57. I don't know what to tell you. The Dow should be a lot higher because the VIX is in the mid-teens. So it's held up well. It's stalling out because of the number of stocks that I'm looking at that are making quite serious shorter to maybe intermediate term tops. And I think it's being reflected by money coming in, but you're not seeing the upside potential, and that volatility index is going to be critical. I'll talk a little bit more about it straight after this.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman, and I forgot to mention, yes, I will be doing Larry's show. Larry will not be here. I'll be doing the show straight after this, noon until 1, and it'll be my pleasure to be doing that, and we'll go through the commodities, etc., in more detail. I'll look at the currencies. I'm going to look at some other currencies like the Australian dollar, etc. So, and any questions you have, maybe either post them in the den for those of you in the den, or get ready to call in. I really want to hear some callers from overseas. 877-927-6648 is the number to call in the United States, and 727-445-1044 from overseas. Love to hear from you. So, let's just add a question. If I would look at Amarin Core PLC, a biotech company, trading at $11.38, up 50 cents. Now, it's had a pretty big left side, right side, twice. It's had this left side, right side pullback, and then it broke under the left side low. In this case, it's the low of 11.29 on the 17th of August. But it's used up a lot of time. And yes, on a percentage basis, from 14.97 down to the low of 11.20, that is big. But it's not only used up that, it's used up price and time. And that means, yeah, it could be ready for a bounce. And I would treat it only as a bounce. And I know whoever asked for it is a person who knows how to trade this, looks at it real closely. So I'm going to recommend, yeah, you could nibble on it right now if you aren't in already. but it needs by the end of the day or tomorrow to break above 1148. If it does that, that's leg B, and then all of a sudden 1172, the 200-period exponential moving average, becomes the very important gap and 200-period moving average resistance. I want to see that turn into support. The technicals are right on the cusp. If this gets another 35 cents to the upside, I suspect the MACD will turn positive. Now, my big concern, of course, is the weekly chart, which has that dreaded H. But at the same time, dailies start to help weeklies. So this just might become a trading range stock that can go from here to the 1245 area. More importantly is you've got to have a tight stop. If you're in right now at 1139, I'd make like 1120 or 1115. On a worst-case basis, part of it must have a small position. Part of it must have a stop at about 11, let's say 20 or 15. And then underneath that, the moment it takes out 11, you're out. I just don't think on the 120-minute chart that will happen right away. I think it's going to go a little bit higher first. But that's where it's going to be very important. So, yeah, a little nibble. Why? Because if this has made a very big, and it's only just a pullback, and it's only a counter-trend rally, then it could quite easily go to 1175, which would be good, and then it can go to 1220, and then you've got to be very careful between 1220 and 1244. So I hope that helps you. And now let's go to the other aspect that I want to look at now. I said the volatility index, the VIX. I'm going to go to the chart that I show. My subscribers get this every day. They get the Dow chart with very comprehensive notation of what we're looking at, the daily chart, without any technicals, with very few. Then I look at all these different aspects. I give an overview, market today, all sorts of things. In my Traders Corner, I give the parameters to look for in the TLT, the S&P, the SPY, the DIA, the diamonds, the Qs, the GLD. I give the perspective of what we're looking at, etc. Plus all the things that we're either long or short. Right now we're long two positions. One of them is just a tad under our entry price, but we actually have two positions to place on that. So this is not a big deal. And the other is moving up quite nicely percentage-wise, not big in points, but big percentage, and three shorts, which are doing well. So my bias is to the short side, besides which I've got a position that I would like to put on if certain conditions are met, which would be the first time in a while I'm going for the index itself. So that's what I'm looking at. Now, look at the volatility index. It's in I'll talk about it a little more in Larry's show, but in the 15s, it's kind of neutral, which is saying this is a trading band we might be looking at in the market. Limited upside, maybe 1355 to the upside. For now, maybe limited downside to the 13,180s, 150s, maybe 13,000 area. But the moment that volatility index goes to 18.5, 19, we're going down. So that's what you're going to look for. I'll be back for Larry's show straight after this.